Hi there, and a very good morning to all of you. And in this video today, I'm going to discuss about the markets, the broader markets as well as the Nifty. And I'm also going to discuss about one of the stocks in the defense space, which is now trying to break out. So it's a breakout trade for the next 2-3 months that looks pretty promising after a lot of consolidation. This stock is breaking out. So we'll discuss about the fundamentals and technicals of this particular stock as well. That's the discussion that will take place. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Uh, Whatever discussion I have is for educational purposes, and I just want to put in my knowledge and give it to you with respect to over the last 12-13 years as to what I have understood about the market. And whatever financial decision you take, kindly do discuss with your financial advisor and then take a decision on the stocks or markets or anything that I discuss. So that's the call. Another call here is for a request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. If you cannot pay on Patreon, you can become a member on YouTube and you can become a member on WhatsApp as well on an yearly basis. Now, I have not been doing well in terms of health, and that is why I was not coming online as well as not putting up videos. And for members also, there were very less feeds that were coming in. Hopefully, from now on, things will resume and normalcy should resume on all platforms. So that's the call. So in order for the market, just a discussion about the market, and then I'll take you to the charts as well. I believe the markets are doing fine and above 17,500, 17,600, they are looking pretty good. And in my opinion, we are headed towards 18,500 sometime in June. Although we will spend some time here, probably a couple of weeks here, between 17,700 to 18,200, but then I believe that with the kind of volume that is taking place and the kind of buying that is taking place, and the fact that we are not falling when the US markets are falling, I think we are headed much higher from here. Another reason for that is fundamental. In case I have always talked about Nifty EPS, and for FY23, which is just gone by, the EPS is around 850 rupees. So at around 17,000, we were trading at 20 times. At around 18,500, we'll be trading somewhere around 22 times. And that will be slightly stretched. So that is where probably most of the selling could come in. But you need to understand that if 18,500 comes in, say in June or mid-July, then you have to understand that by that time first quarter earnings would be coming out for FY24, and the markets will be looking at FY24 numbers and not FY23. Market is always forward looking at least 6 to 12 months. So in terms of FY24, if we look at the earnings perspective, then we are in a situation where the earnings could be closer to 950 rupees at least. So I believe 950 rupees of earnings for FY24 means that 20 times that is around 19,000. So over the next year or so, not at this point of time, but probably by March of next year, we could be hovering around 19,000. So that's the call. I think it's not going to be easy. The move will not be very swift. In fact, I believe that from now on in, at least for the next 2-3 months, it will be stock specific move. There have been a broader rally altogether in all sectors, but stocks that are performing well, that are making new highs, that are making 52-week highs, 2-year highs, should continue to perform well, because they are doing that for a reason. They are doing that because their numbers are coming out pretty strong. So look at those companies if you are trading in the market from a 1 to 3 months perspective, say 2 to 3 months perspective. But if you are investing into the market, look at companies which have been, I mean, which are perhaps have not done well over the last 2 quarters, but are reasonably valued, very good quality, you can say brands that are coming at very decent valuations. An example of that is a stock that I hold in my long-term portfolio and everybody knows about it, and that is Asian Paints. Now, what happened with Asian Paints 2 3 quarters back? We all know that the stock fell to 2400, 2450, and all that, and kept on going down. And the markets, some of the experts write obituary about it, that it was so expensive that it had to come down, and it has been ultra expensive for many years, and now it may not perform that well, but we are seeing the stock back at 3000. So you need to pick good quality, top quality, you can say brands across the board, irrespective of market cap. If you know that they are top brands that have performed but are now down 25-30% from the top at least, that is where you buy. Look at a Bajaj Finance. When it made its low, it has made a huge comeback. Although I am not a proponent of finance stocks, but that is one stock, just for example, that will make you understand as to how these I mean these companies, these large companies, these top brands perform over years. So this is a stock pickers market for somebody who wants to invest 10-15 years down the line. This is a stock pickers market for somebody who want to trade to from a 2 to 3 months perspective. This is a very difficult market in some cases for those who want to do intraday trading. Although for the last couple of weeks it has been pretty good, that the market has gone up in a you can say streamlined manner. But I think now on, in the next 2 months or so, we are going to see up and down movement. It will be extremely difficult. Volatility should increase from here. Volatility was down to around 11. I was just looking at it before opening, before starting this video, that volatility went to around 11 or 10.9 at the end of April, and now it is starting to crop up. So what will happen is that if the volatility goes beyond 14 15, then we are looking at the market going down and probably sideways, and probably when you look at the market at the end of the day, it might not have done much, but it would have gone up and down a lot, to all places. And so that is where intraday traders might get trapped big time on the upside and downside. So my way of trading is, if from a 1 to 3 months perspective, 1 month to 2 months perspective, from result to result, and taking in profit. So probably that is one you can say way of making money in this market that you could master, and do well there. Then you will not feel the anxiety of you can say doing intraday trading and all that. So but somebody who's doing that well can continue to do well. So that is my perspective of the market. Now let me take you to the screener website, and to the website of Stock Edge, and there I will discuss that. There's no promotion here, but this is the website that I use a lot in order to analyze charts. So we'll discuss about the markets, and then we'll discuss about this defense stock as well. I hope you are able to view. Just a second, and let me just open this up. So this is the Nifty chart. I mean, this is the Nifty chart from a 3 months perspective that we are looking at, and it's kind of interesting that it went to around if you look at here, around 18,130, and then this was around 16th of February, if you see, and then we went all the way to 16,800 levels or so, when we made those lows around end of or mid March. And then we spent some time here till end of March, and eventually a broke out, and we made a high now of around 18,267, if I'm not wrong. Yes, 18,267. So basically from here, if you see here, from 17,800 levels, when we broke out, and we started to move up, I think we have reached our target. We have reached our target of 18,250 the markets move in 300 point band normally. So 17,900 to 18,200 is what we are looking at. And now the market dipped yesterday to 18,000 levels. And now I believe that we should get to at least 17,850, 800 before making a move. So we could see a gap up opening tomorrow because of what has happened with Dow Jones, but I think it will be sold off, and we should be around 18,000 levels, uh, around 17,800 levels in the next couple of days. Another thing that can happen is we might not fall, and we might just take out 18,300 and go to 18,500. In that case, I have a feeling that we could be in a situation of massive sell-off from 18,500 levels, which I preferably will not want. So that is why I want this market to probably consolidate between 17,800 to 18,000 levels. If you look at here, the high was 17,860, so probably will breach that, and around 17,800 there are multiple supports. So around these levels of 17,800 or so, if you see here, the high was 17,770, so 17,800 or so, market could just take a little bit of breather, and then after a week or 2 weeks can start to move up again. That would be the preferred situation. Otherwise, there could be a chance that we could head towards 18,450, 500, and then we'll see a 4-5% sell off in a week, or say 7 to 10 trading sessions like that. So that's the call on the market. If you look at the broader market that I wanted to discuss with you, so if we look at say a Nifty 500, if I can open that, then you'll probably understand that we are at 15,270 now. This is Nifty 500 has most of the small caps, mid caps, everything. So if you look at a chart of Nifty 500, then again you'll see that it's 50 DMA is around 14,900. We are at 15,280. Now here in this case, I won't say that this is stretched a lot, and this is the reason why mid caps are doing well, because they have not performed that well over the last 2-3 years. So if you look at uh, if I just show you over the last 2 years where the Nifty 500 is at the moment, then you'll understand that it has done nothing. So in you can say October of 21, when the market made its top, the Nifty 500 was at around 15,800. It's actually 2 year high was 16,041 if you see here. So its 2 year high was around 16,041 in December of 22, which should be around here, or somewhere around here. So that is where it made it's you can say uh, 2 year high that we keep on saying. But after that we have a situation that over the last you can say, so December 22 it made its 2 year high, but after that it fell. So it made triple top basically from 15,800 around here to 15,800 or so around here, then 15,800, not quite 15,800, but then we made 16,000. So this was the third top that we made around 16,041, and then we fell. So this is quite interesting. This mid cap index could, or mid caps could just gyrate here, and then once it breaks out of say 16,000, we could see a huge move on it, probably a 15% 20% move to 19,000 levels or so. This is the kind of a breakout that I expect in this market. So currently the market is around 15,280. It's not overstretched, as I believe Nifty is more overstretched on a shorter term basis. And so here what can happen is that we can go back to 15,000. So we could see again a 2% dip here maximum if the market really falls from here. 2% dip in the mid cap, or you can say in this Nifty 500 index, and then the move will again begin. So I have a feeling that we are in a consolidation in a roaring bull market that could continue for the next 1 year. Next support, in my opinion, for this index is around 15,000, 135, 15,100. So again, 1% fall here is not ruled out, and it should be good, it should be healthy for the market if we go to 15,130 or so, and then we find support there. If you look at a 1 month chart, then it would be more understood as to how the market is behaving. We are seeing that we made a top here of 15,400, and then we are falling at the moment. So I won't be surprised if we go towards these levels, 15,080, 85, and then probably hold on to these levels and then move up after that. So that's the call on the Nifty 500. Stocks are doing their own thing. Analyze your stocks and then you'll understand as to where to put in your money. All right, so let's discuss about the stock in question, and you would have seen it already. It's Bharat Electronics, and why I brought Bharat Electronics in here is because of most of all is the technical reason, but just I want to give a minute or two to just give you an analysis on the fundamentals, and then we'll go to technicals. Yeah, the market cap of the company is around 78,000 crores or so, trading at 28 times, which is not ultra expensive, stretched but not ultra expensive at 106 rupees. So basically, it was established in 1954 in association with CSF Finance. Now you can say Thales, and to meet the, you can say, specialized electronic equipment requirements of the Indian Defense Services. So they make all the kind of, you can say, defense products for the Indian Army, and very restrictive business in terms of, you can say, barrier to entry is extremely strong, and so not many people can get in here, and the numbers do tell a story that they have grown tremendously over the last, you can say, 5 6 years. If you look at it, with more orders coming in, if you look at from FY14 with 6,500 crores of sales, it has grown to nearly 18,000 crores of sales right now, so nearly 3x over the last 8 9 years in terms of sales. And similar is the situation in terms of profitability, from 1.2 rupees to 3.7 rupees in terms of EPS. So if you look at the numbers in December quarter, what they did was that they did around 4,200 crores of sales, versus last year when they did around, you can say, 3,700 crores. So a good 15% jump in sales. Yes, the profit or operating profit remained flat because the margins dipped by 2%. But what the street believes now is, with the next numbers coming in, that the margins might have bottomed out or will bottom out in the March quarter, and things will pick up because there are a number of orders that are in the pipeline that the company will get. Another thing is that this is the election year, so the government will do a lot of things with respect to infrastructure and into defense, so that they have the spending power there, so that they'll be able to do that going into the elections, that they would do into, you can say, all the growth driven kind of thing. So defense will also make up for that. There's a decent order book flow that will come in FY24 that the company has told about. So the numbers should increase going forward after March. That is the assessment. In terms of, you can say, balance sheet, it's pretty strong, no debt whatsoever, 12,000 crores of, you can say, reserves. That's why pretty good player in terms of giving dividends as well, so a good long term bet as well. And see, if the government stays, and we have a strong government at the helm, then we could see these kind of defense stocks even perform well for the next 5 to 6 years, so a good investment bet as well. Promoters hold 51% of the holding. FIIs currently hold around 16%, and what has happened is that FII holding has sharply increased in the last 2 3 years, but has not decreased a lot. If you see in the last 3-4 quarters, although FIIs have sold big time, but here in March 22 they had around 16.8% stake. Right now they have 16.4% stake. So that's pretty good. And DIIs have remained strong as well at around 25.5%. Public shareholding is only 7%, which is always good in any company or stock after what we have seen in what happened in October 21. So this is a stock to probably invest as well as trade into. Now let me just take you again to the charts of Bharat Electronics and then let you know as to why I believe this stock could end up doing well over the next 2 to 3 months. I think can perform exceedingly well. So if you look at Bharat Electronics, it's around 106 rupees at the moment, and from a 2 year perspective, its high has been around 110 115. So if you look at here, the 2 year high is 115. So one thing here is clear that above 115 there is absolutely blue sky, and this could very well go to 140 150 if the results hold and if the results really support. That's one point. Second point here is if you look at the charts from a 3 months perspective, there has been a lot of consolidation in this 102 105 band. You look at here, 103.85 as the high, 103 as the high, and 3.3, 103.5, 103.2, and so on and so forth. And then it showed a little bit of dip and then the breakout. So I have a feeling that around 105, if one can get in here 1 rupee lower at 105, 105 and a half, you have a very decent, you can say, kind of a stop loss at around 101 or so. So you can buy at 105, have a stop loss at 101, and probably once it breaks out of 115, then you can shift your stop loss from 101 to 105 or 106 and trade long and keep on holding on to the stock for a target of 130 140. So you can reverse the tape and hear that again, but currently if you buy at 105 105 and a half, keep a stop loss at 101, and so that's a 4 rupee stop loss, and look for a target closer to 130 135. Shift your stop loss to 106 once you are, I mean, above 115. So what will happen is that you'll be in money, and once 130 is hit, you can book profits of 20-25%. So that's the call on Bharat Electronics. It's a clear breakout from 104 levels. Any dip, any chance you get below 106, say 105, 105.5, grab onto that opportunity. Again, disclaimers do apply. Your stop loss is 101. And I think once the move picks up and picks up big time from these levels, which was the high 108, once it takes out 109 1010, I think 115 will be taken out once the rally begin again. So I think Bharat Electronics is a very decent buy here. So this is a video on Bharat Electronics as well as the markets. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot.